Welcome back. My name is Arya and I don't waste your time, so let's get straight into it. Ladies and gentlemen, in today's video, we're going to go over a company which I have 22% of my net worth invested into it. And of course, I'm talking about Salesforce.com, which is in fact the customer relationship management software. And the reason we're talking about Salesforce.com in today's video is because they just reported earnings and they had a disastrous earnings report. That is, if you look at the stock price and notice it's down 17% since only a few hours ago. So in today's video, we're actually going to go over the earnings report. We're going to look at some of the key metrics that I was able to identify. Additionally, we're going to talk about how I think this serves as an incredible buying opportunity and why I personally invested a little bit more into the company. Something to note with this video is this is not a stock analysis like some of the other videos that I've done previously. So we're going to go over the earnings report, but for those of you who do not know what Salesforce is, as I mentioned, it's similar to Excel. It's essentially Excel, but way more visually appealing. And this is kind of what it looks like. This is the core Salesforce offering, the software. They have some features like the pipeline and all that type of stuff. It allows you to store a bunch of data on your customers, your suppliers, all that type of stuff, and essentially see where some projects are at. Very good for communication internally within a company. It's a B2B software company. Jumping over to the earnings report, I'm sure all of you guys are dying to know, why is it down 16%? Ladies and gentlemen, and I want you to decide for yourself whether or not this is justified. I'm not going to share my opinion as it is right now. We'll dive into that a little bit later in the video. But the whole reason for the sell-off is slightly softer guidance. Full year 2025, because they're ahead one fiscal year, so this is actually for 2024, initiates second quarter full year, calendar year 2025, revenue guidance of $9 billion to 9.25, up 7 to 8%. So a little bit weak for that second quarter, and previously they hadn't talked about the second quarter guidance, so a little bit weak on the revenue side of the things, and then maintains full year 2025 revenue guidance of $37.7 to $38 billion, up 8 to 9%. So for the full year, they're up a little bit higher than what they expect for the second quarter. So far, talking about revenues, they initiated slightly lower than the full year amount, but the big deal, the reason why the stock is down 16% is they actually lowered their guidance for GAAP operating margins to 20%, but they're maintaining their non-GAAP operating margin of 32.5%. That's it. The reason why the stock is down 16% is they slightly lowered the GAAP operating margins guidance. That's it. How's free cash flow doing? Free cash flow, which is the most important thing that this business tracks. Well, they continue to maintain their operating cash flow guidance of 21 to 24%, growing year over year. So again, I want to recap because this is just of the utmost importance. Salesforce.com has sold off 16% and lost $40 billion of market cap only because their operating margins ticked down by about 2%. Now jumping over here to FinChat, we are able to see the historical operating margins of Salesforce to compare it to maybe, they were historically in the 30% range and actually a tick down to 20% is massive. You would absolutely be wrong. In the most recent quarter that they reported 90 days ago, their operating margins were 19.3%. They have just guided for 20% operating margins. So actually it slightly ticked up, not down, guys. The only thing that ticked down was the guidance that the market expected for operating margins to be significantly higher. They've slightly ticked that down to only 20%. And additionally, if we switch over here to annual, you would notice a very clear and strong trend of operating margins being able to expand over time. In 2020, their operating margins were only 3%. 2021 and 2022, very similar stories, but since then, operating margins have been climbing and they've been climbing rapidly. So again, I need you to ask yourself, is a 1 to maybe 3% tick down in operating margins justify a 16% sell-off? I personally don't think so. That is why I actually bought more shares in the after hours trading. I want to jump over to the investor presentation to look at some key items that I was able to sort out. First of all, just straight out the gate, free cash flow of $6 billion is absolutely monstrous. Last year, in the entire year, they produced $9.5 billion of free cash flow, and they just put $6.1 billion of free cash flow straight into the bank. Again, I'm just saying, looking on operating margins and all that type of stuff doesn't look too great, but if you simply look at the cash that came into the business and the cash that left the business, I'm just saying. Moving down here, again, the guidance that we went over, 7 to 8% year-over-year growth for this quarter specifically, but full year is still at that 8 to 9% roughly. One thing to note that is of the utmost importance is, again, the current remaining performance obligations. This grew 9%, but the more important thing to note is that the total remaining performance obligations, this is all the contracted revenue that is in the pipeline. So maybe not this year, where current is only the amount of revenue that they're supposed to generate this year. Total is just contracted for multiple years out into the future. That actually accelerated. That grew 15%. Just something to note, maybe in the next couple quarters, the revenue outlook isn't too great, but if you span out and you look multiple years out, we know that TRPO is growing massively. So again, this is a company that can project out its revenues very clearly, and the shareholder could quite simply look at this number right here and be able to tell whether or not the demand for Salesforce products is going down. One last thing to note before we move on here is the marketing and commerce segment of the business. So whenever you get like an email from like Amazon or whatever saying like, oh, this item in your shopping cart, don't forget to buy it or whatever, or whenever you get like confirmation emails and all that type of stuff, that's all done through Salesforce, right? So you're able to go into the Salesforce website and you could choose, oh, send it to these 500 people that recently visited our hotel, sell them a thank you note or whatever it is, right? So that actually, this is re-accelerating over the past couple of quarters. This is a part of the business that I'm massively bullish on because I think marketing and commerce is something very powerful for businesses to pull on to try to generate additional revenues. And that's something that I think has a long runway of growth ahead of it. One other thing that I want to point out is actually share dilution has grown 0% year over year. So if you actually jump over here, you might notice that their shares outstanding over time has grown massively, right? Especially if we flip this over to a yearly view, you would notice that they've consistently diluted the shareholder over time. This is because it's much cheaper to raise cash by diluting the shareholder as opposed to borrowing it from a big bank. So that's something that they've historically done. But on a going forward basis, it seems that they're going to either maintain or actually start buying back shares. As you would notice, fiscal year 2023 and 2024, there's a very clear trend on that front. And additionally, they actually issued a dividend in the most recent quarter, which they reiterated. So jumping over to valuation of this company, and this is a spreadsheet that I include in every single one of my videos. Long story short, what we're doing here is we're taking the current valuation of the company and we're dividing it by how fast we expect that company to grow. Green means that it's trading at an undervalued price relative to the amount of growth that this business is expected to have. And red means that it is overvalued, right? So if we take a look at Salesforce, and actually we need to adjust the stock price. So at the time of this recording, it's trading at roughly $228 per share. So if we simply put in 228 into the spreadsheet, you would be able to see that we take a roughly 18% growth rate and we divide that by 25 times cash flow to arrive at a 1.4 times growth multiple. This means that the company is extremely undervalued for the amount of growth that it is able to produce. Relative peers such as Alta Beauty and Evolution Gaming are also trading in a similar multiple. And also the reason why we're actually using free cash flow and not something like earnings per share or other metrics is because there's a concept called float, which if you ever read any of the Warren Buffett books or if you watch any of the shareholder meetings or anything like that, he consistently talks about float. Float is essentially the concept where if you're able to take in cash into the business before you actually provide a service to your customers, you could reinvest that cash back into the business or be able to do buybacks with it. And that could be accretive for the shareholder while you haven't even provided the service to your customer to earn that revenue. So if we look at earnings per share, if we look at revenue or anything like that, it's a little bit misleading because Salesforce actually takes in a lot of cash ahead of time for services to be provided over the duration of the year. And they're able to take in this cash and again, as I mentioned, do buybacks or reinvest it back into the business, reinvest it into R&D, reinvest it into literally anything and do whatever they want with it because they're taking in the cash before they provide the service. So that's why we use free cash flow as opposed to something like earnings per share. And looking on a free cash flow basis, Salesforce is trading extremely cheap relative to its growth rate. This is especially true if you compare the current price to free cash flow to its historical. If you look at the historical, it had traded up towards a 60 times price to free cash flow multiple at one point in 2020. And if you go over and look at the average price to free cash flow over time, you could see that it has done nothing but consistently go down. And this is, might I remind you, normal price to free cash flow, not adjusted for the stock-based comp that the business does. And on a forward basis, this hasn't actually updated. It says 22, but on a forward basis, the price to free cash flow is actually at an 18 times multiple. Might I remind you, the S&P 500 trades at roughly a 30 times multiple. So you have to look at it. You have to look at the 18 times multiple and think to yourself whether or not Salesforce is the better buy for the amount of growth that you're getting or the S&P 500 for the growth that it's providing. I think in my opinion, Salesforce, which is a significantly wider moat business with incredible switching costs, is the significantly better package as it stands currently, especially when you compare it to the historical valuation of the company. It's not like I'm lying to you guys. You can look at the stock analysis that I've previously done in the 2 videos. This is a company that has incredible margins, incredible switching costs, and has everything going for it. I think today's sell-off is absolutely unwarranted. And I did this exact same thing in the MSCI video. In the MSCI video, I looked at it. I said, this is an overreaction by the market. I'm not saying I'm going to be right in the next couple of weeks, but but I think this presents itself as an incredible buying opportunity. And that is why I personally also was buying Salesforce in the after hours today, and I'm going to be buying more tomorrow. And if you like the fact that I don't waste your time, I'd like to ask you to do something that costs you nothing, but would help me out greatly. If you could please hit the subscribe button, I'm going to continue to post high quality videos just like this one, and you could always go back on that decision if you end up not liking the videos, but I highly doubt that. With that being said, thank you very much for watching, and have a great day.